So on Thursday, we had 11 new highs and 121 new lows on the Nasdaq. This is a significant amount of new lows versus new highs. So what does this mean exactly? And what is the market telling us when we see a significant amount of new lows versus new highs? Stay tuned. We're going to talk about all of that coming up next. Hello everyone, my name is Paul Zachary Shelton Jr. and I'm the Chief Investment Officer of Warwick Shore Advisors. We are a wealth and investment management firm located in Orlando, Florida with clients all across the United States. If this is your first time coming to my channel or seeing one of my videos, I ask that you please hit the subscribe button. Please ring the bell so that you can get an update each time I post a new video. And lastly, please like and share this video to help me increase the financial literacy of our globe. Before we get into today's topic, I want to offer up a free financial planning cheat sheet. This financial planning cheat sheet will give you the footprint and the tools to be able to establish and repair some of your credit and put together an estate plan for you. I'll also throw in a free asset allocation that you can use right now in our current turbulent markets. If you're interested in that free financial planning cheat sheet, just leave a comment below or shoot me an email to the email address listed in the description of this video and I'll send that over to you. There's completely no obligation for it. It's completely free. It is my gift to you for watching this video. So let's go ahead and jump into today's topic, and that's really discussing where we are in our economy and what the volatility that we've seen recently over the last 4 weeks truly means. Now, there is a camp of believers out there that says that our economy is going to ebb and flow up and down in this range-bound area that we're in right now until we have something to point it in another direction. I believe that to a certain degree. We are kind of floating around right now. We're hoping and pricing in, at least at the end of the summer, in the middle of the summer, we were hoping and pricing in the factor of another economic stimulus payment being disseminated to all the citizens of this country. As we've seen Congress go through a stalemate, and as we've seen nothing happen out of that, we've kind of noticed that the market is starting to not only react based on economic stimulus, but it's starting to react based on fundamentals. So we're getting back to some natural trading that has taken place in the market. And as such, most recently over the last 4 weeks, we've seen an increase in the volatility of our markets. Over the last 4 weeks, we've seen the VIX increase by 28%, which isn't astronomical, but it is rising. And on the RSI level of the VIX, it is showing that although it went up, the VIX has went up, it does show that from an RSI standpoint that there is possibly still more room for additional volatility in this market. Even though we've seen a 28% increase in volatility, it appears that there is more headwind ahead in our markets. So how do we prepare for that? And what exactly does it mean when we see so many new lows and so few new highs? First off, let's think about this. We're only dealing with the Nasdaq, as I mentioned earlier. So Nasdaq is traditionally a tech heavy and biopharmaceutical heavy index. So we're not looking at the broader market. We're not looking at everything across all the sectors in our economy. But when you think about it, the tech index, as we can call it, the Nasdaq, if we're seeing a significant amount of new lows in that market, a significant amount of new lows in that sector, that could very well mean that the reversal away from that stay-at-home tech trade is underway. We could very possibly be seeing and realizing the fact that we're shifting away from that tech trade, and we're starting to confirm the routes that we're moving back towards the fundamental and towards possibly a secular trend back away from growth to value in our economy. Typically, when you look at the high-low index, which is a measurement of the new highs versus new lows over an average 10-day period of time, anything over 50 on that index would suggest that the market is becoming bullish, and anything under 50 would suggest just the opposite, that the market is becoming a little bit bearish. Right now, we're seeing so many new lows on the market. It's starting to confirm and really trend. It's starting to show that we have a downward trend in our market in that respect. So since we're having a downward trend in our market, and that's been evident over the last 3 to 4 weeks of trading, as we can see, what does that mean for our portfolios, or what does that mean for how we position ourselves to be successful in this market? One thing that I always advise people of is to stay disciplined. Develop your asset allocation, develop your target, develop your plan, and stay disciplined to that. No matter how you have defined your level of risk or how you've come up with your asset allocation, if you can stay disciplined to it and you truly believe in it, then it will work for you over the long run. Now, that's if you put the proper risk management and risk parameters in place for that asset allocation. If you have any questions about how to design a portfolio to mitigate risk in a market such as this, please reach out to me directly. You can contact us at the email address listed in the description of this video, or you can also leave a comment below. I do as best as I can to get to all the questions in all of my videos and try to help guide you through the market. If this is your first time coming to my channel or seeing one of my videos, I ask that you please hit the subscribe button. Please ring the bell so that you can get an update each time I post a new video. And lastly, please like and share this video to help me increase the financial literacy of our globe. Thank you so much and have a great day.